Okay, so China has made history yet again, exposing the fundamental rot in the US system. This is a narrative of how China is succeeding with minimal resources despite the great tech restrictions imposed by the US, and how AI technology in the US is nothing more than a gigantic money hole. A lot of money has been invested, yet the outcomes pale in comparison to what China has done. DeepSeek is a one-year-old Chinese firm that began as a side project for a hedge fund. This is a direct rival to OpenAI, which created ChatGPT, but it is even better. It's living proof that China can do a lot with little, which is why DeepSeek is a game changer in layman's words. DeepSeek, a Chinese AI, is far less expensive to construct. It's more efficient, productive, and, most importantly, free for everyone to use, which debunks the illusion that America is exceptional, especially given that they have everything in the world to work with. Why couldn't US tech titans like Microsoft and Google come up with anything similar? From 2024 to 2027, only 5 US technology businesses will invest more than $1 trillion on artificial intelligence. That's $250 billion every year. But what will they gain out of it? This is the key question today. And if you're in the market, it's time to be extremely cautious, particularly around US tech equities. There is a lot of waste going on. Valuations are exceedingly volatile, and IT giants must justify their investment money. These are the investment dollars poured into the equation by hyperscalers Amazon, Google, Meta, Oracle, and Microsoft. They will spend more than $230 billion this year chasing the AI dream. But if they can't find a method to earn money compared to the amount invested, this tech bubble might fall like a house of cards. We might now be witnessing the beginning of a Minsky moment. It occurs when a market unexpectedly declines after a long period of speculation, which is exactly what we may see in 2025. In only a day, US tech stocks are expected to lose at least $1 trillion in market capitalization. The Nasdaq is down 2 to 3%, and chip makers like ASML in the EU are dropping like flies. NVIDIA has lost at least 10% of its value and is expected to lose another 5 to 10% before the end of the trading day. This might be the black swan event that brings down the system. There's a reason why Beijing announced this achievement just one day after Trump took office. It's a signal to Washington not to play around. Even if you impose a slew of taxes and penalties on us, our industries will prevail, and when we do, it just throws a bright light on your shortcomings. It's critical that we understand how China managed to do this. Once we grasp this, we may expect further advances in the next months and years. DeepSeek is only one illustration of what's to come. It's even more funny because this only cost $6 million and was only a hedge fund's side project. It wasn't even their core business, unlike US behemoths such as OpenAI. The United States does not have a monopoly on invention. DeepSeek is driven by a massive amount of NVIDIA chips. Now, estimates range from 10,000 to 50,000 H100 GPUs. But wait, hasn't Biden imposed severe technology penalties on China? And if that's the case, how could China create tens of thousands of such chips? Clearly, physical restrictions against semiconductors are ineffective. Now, the idea is rather straightforward. If we refuse China our most sophisticated semiconductors, that would halt their advancement, right? To do this, we must punish the entire planet and shut all loopholes. The Biden White House has restricted chip exports to discourage countries from developing AI technology. China and Russia, of course, face the most rigorous penalties, Tier 3. Take a look at Latin America, India, and much of Southeast Asia. These nations are classified as Tier 2, which indicates they do not have access to the most advanced chips. Washington is attempting to penalize the globe in order to prevent chips from being re-exported to China. Only their closest allies, such as Australia and the EU, are categorized as Tier 1. But NVIDIA's bank chips continue to wind up in China, and we now have DeepSeek. So the semiconductor limits are clearly ineffective. It's not working, and no matter what the cost, China has the money, the piggy bank, to cover it. And this is one of Beijing's key advantages in the economic battle. Now, this piece from the Wall Street Journal explains it all. China has a $1 trillion advantage in any trade war with the United States. Because China is the world's largest exporter, it generates a trade surplus of about $1 trillion. This provides them with a large piggy bank to deploy in crucial businesses. They had previously invested a significant amount of money in developing their EV industry. Look at it now. The government is currently using the funds to boost their AI and semiconductor companies, so it's only a matter of time until China closes the gap. It won't be long until China builds its own AI processors via businesses such as Huawei. When that happens, NVIDIA will be in big danger. It is critical that we grasp this. The open source plan is just frosting on the cake. They basically inform the world that we will educate you on how to create these AI models. We will provide you with both the code and the outcomes, so you can build on top of it in whichever way you want. This indicates that the value of OpenAI's model has fallen. Overnight, it loses value. And after DeepSeek has a large user base, they will begin to monetize the ecosystem. When that day arrives, the earnings will far outperform those of U.S. technology businesses. So, what are the ramifications for U.S. technology stocks? Well, it's not good. And let us recognize how overpriced U.S. corporations are, particularly those in the AI technology sector. Despite the market gaining by 52% in 2 years, AI stocks have increased by 80%. That's unprecedented. Thanks to the hype train, investors pumped $15 trillion into the NASDAQ 100. As a result, the technological surge is far from over, and we all know that the higher you ascend, the bigger the fall if something goes wrong. Here's where the trade war comes into play. China is making DeepSeek open to everyone, even Americans. This means that even enterprises in the United States can benefit from it. DeepSeek is particularly useful to developers and integrators along the AI value chain. These include firms such as Meta and Google. They may leverage DeepSeek to fuel their business strategy. However, if the United States decides to prohibit Chinese technology, like it did with TikTok, these firms will be in danger. Local Chinese enterprises will develop quicker and at a lower cost than U.S. technology corporations. Second, hyperscalers might be in peril. Have they invested too much money for too little return? Are billions of dollars even necessary? And that concern alone might bring profitability down since costs are so high. Prior to DeepSeek, the AI story was progressing wonderfully. Take NVIDIA, for example. Their earnings were fast increasing since the world decided it required a massive amount of high-tech chips to construct AI, and thus supported the exaggerated stock price gain. But that's not a huge deal, right? DeepSeek developed their own AI solution using 30 times less GPU. That implies you probably won't need as many chips. Earnings are going to plummet. And if corporations can figure it out, demand for NVIDIA's goods may decline. In other words, profits would plummet. Now, I'm not suggesting it will fall to zero, but even a small decline might bring this expensive stock crashing down. So, if you've jumped on the AI hype train, you should proceed with caution. China might be a black swan event for the United States economy. So here's what we mean. In 2024, the Wonderful Seven, including NVIDIA, accounted for 34% of the whole S&P market capitalization. If investors conclude that U.S. technology businesses are overpriced, the bull market for all is virtually gone. A price crash in U.S. technology would bring down the whole stock market as we know it. There's a reason why U.S. equities have been soaring over the past 3 decades. It's because investors think the U.S. economy is unique and their invention is remarkable. However, DeepSeek is causing some to rethink this. This is really crucial to comprehend. The stock market is extremely volatile, and much of it is dependent on mood and perception. If that breaks, we might see a significant repricing event. And that's a fancy way of saying the collapse would be significant. So hold on, folks, this is going to be nasty. This is going to be a crazy ride. But tell me what you think. Is China's DeepSeek a game changer? Or are U.S. technology businesses still in a dominant position? Stay safe, like, and subscribe as we traverse these tumultuous times.